If you're not already, you should consider using a high yield savings account in 2026. And that's because the stock market is down almost 7%. Gas prices are extremely high, and we don't know exactly what is going to happen next. So in this video, I'm going to talk about the pros and the cons. And I'm also going to talk about the strategy behind it, because it's not just open an account, put some money in there, and you're going to get a whole lot of passive income. Because yeah, you absolutely can, but there's a little bit more to it. So let's jump right in and break things down. The first thing is, I've gotten a lot of questions both from clients and friends and even in the comments. What are they and what makes them different from your typical savings account that you might get from your major bank? A high yield savings account is high yielding. Now, the yield part is the percentage that you are getting as the account holder or the account owner. Now, what are these and what makes these different? A high yield savings account is a savings account that pays a bit more. That's what the high yield stands for. I don't know why they use yield instead of, I don't know, high percentage account or high paying account or whatever. Banking is what it is. In either case though, the difference is they are paying you a whole lot more than what you would at your typical bank. Now, the reason why this is the case are a few things. Number one, most, not all of these banks are those that don't have regular brick and mortar places. If you look at a savings account at Bank of America, Wells Fargo, most city banks, they are paying you well under average. And as of today, and rates do change over the years and months, we'll see what happens this year, you can get a high yield savings account anywhere between 3.2 to 4%. And that is a rate that the bank is going to pay you, and that is very solid. Again, I just told you the stock market has lost so far 7%. It could get worse, maybe it'll improve, we'll see. The bank is saying, hey look, here's 4% for parking your money here and doing absolutely nothing. That is the advantage. Parking your money for something that you should already have. Everybody should have some sort of savings account. I've been arguing for more than a year now. You want to have more in cash. Why? One, because you want to increase your cash because the job market isn't all that great. You don't know what's going to happen next. 3 months, 3 to 6 months of your expenses as emergency savings, it's probably not gonna cut it anymore. So if you have 12 months of your expenses making 3 or 4%, you can make a whole lot of money just sitting there, because you have to have it anyway. You should have it anyway. So doing that in a high yield savings account is a good piece of the strategy. We'll talk more about the strategy piece later on, but that's what a high yield savings account is. Why do they do this, and why do more of these online banks have it? They don't have the cost of paying so many staff. They don't have to buy buildings, pay rent, all that type of stuff that they have, right? They pass those costs, or those savings rather, on to you, the consumer. That is how a lot of these things work. And the more money that you give to the bank, right, or let them hold on to, and more money that they incentivize you to give to them, that's the more money that they have to loan out and make more money with auto loans and other things like that. That's how the whole banking system works. So that's why high yielding savings accounts or high yield savings accounts exist to begin with. Now, the interest rates that you see today can and will change and have changed over the years. I've done a whole deep dive on this channel, several videos about when interest rates have changed and the reasons as to why. Basically, they changed to incentivize people to spend more when the economy isn't doing all that well, or to stop people from spending when the economy is running a little too hot, to slow down inflation. That's why they do those things. Now, as of recently, the Fed had kept interest rates where they were, and that kind of tells you what the Fed thinks. Either they're sitting still and say, hey look, we're just going to keep watching and waiting and see what happens, or they'll cut interest rates and say, hey look, I need y'all to go out there and spend and stimulate the economy. Or right after COVID, it's, hey, let's increase interest rates, pay people more in their savings accounts, right? Let's have people pay more on their mortgages, which is not great if you're looking to apply for a new mortgage, to slow people down because inflation was way too high. All right, so that's the entire point. So what you are paying today, or what you're getting paid today on a savings account, can change, and it changes across the board. So if you get a high yield savings account today, you're like, well, hey, my rate's going down, I'm gonna move it to Bank B, they all gonna change. They all gonna change, all right? So that's not why I'm telling you, go to this one bank and this is what they're paying today. It can and may change. I see people complain all the time saying, hey, my interest rate's changing, what's going on? It's because of the Fed, and it's because they believe one way or the other based on where the economy is going, what they think about the economy. That is normal. It has happened over the years. Again, go back to the COVID time, you can go before then as well. There used to be a time where high yield savings accounts, a good rate was 2%. Now we're looking at 4%. You take that for what you will. Okay, so there's a lot going on there with the interest rates. But as of today, and this can change, anywhere between 3 to 4% is considered quite well. I'm going to give you a few websites and a few recommendations on the banks that I have had good personal experiences with. I'll also give you a recommendation of banks I have had personal experiences with and a website that you can check out as well. Now, what are the cons? I'll end up on some of the pros, because every financial tool has some sort of con. That's what it is. It is a savings account. It is a tool that you can use. It doesn't pay as much over the long term. You're gonna hold it for years and years and years. It doesn't pay as much as the stock market typically does. Now, right now in 2026, you're getting paid more, right? So there's the upside, but you're not gonna get rich. You're not gonna get rich by putting all of your money in a high yield savings. It is a good baseline to have. It is the bottom of the pyramid. It is the foundation for which you can build your wealth. But it ain't everything. It is not everything. But when my wife and I, we got married, people gave us wedding gifts and all that kind of stuff, where did we put it? A high yield savings account. That's where we put it. We left it there from 2015 to 2021. A whole lot of interest that we built over that time. The interest rates did change, but that's the money that we used to buy the house. Ta-da, right? It wasn't everything. I could have made a lot more had we put it in the market perhaps, but that's what we put it in. There was a specific reason as to why. I'll tell you that in the strategy section. But that you're not going to make a ton, but it is a good place for your emergency savings for cash that you know that you need. If you choose an online bank, which again, they tend to pay a whole lot more than your traditional, brick and mortar banks, you may have to deal with a 1 to 3 day transfer period from online bank to checking account if you don't have a checking account at that online bank, which also means you may not find it easy to deposit cash. Some people prefer that, and that's totally fine. Your style is your style. I'm not here to judge. I'll talk about my personal experience here, and this is not to bash or recommend a certain bank because they don't pay me. Perhaps they should. But a bank like Ally, they're extremely popular. They do pay a high rate, but one disadvantage is if I have to transfer money from Ally to just thinking of a bank like a Bank of America, it takes us 1 to 3 days. If I have a deal that needs to be done, if I have a deck or something that needs to be fixed, clearly I haven't fixed it because it's expensive. I keep telling y'all about this deck that needs to be fixed. In either case, if somebody comes and say, hey, look, I can fix it today, it's gonna be $3,000 or $4,000. I guess it's gonna have to go on credit card, assuming they take credit cards. Because other than that, it's gonna be 1 to 3 business days before it comes out of the house account and moves over to a bank where I can actually get cash. And also, if somebody gives me cash, how am I going to put it in the Ally bank? I gotta put it into a regular bank account and then wait for it to show up and then transfer it. Like, some people care about that, some people don't. I'm just letting you know that there's a con that you might have to consider. Some people never deal with cash. It's all up to you, but I want to bring that up. Now, those are some of the cons. It ain't many of them, to be honest with you. The pros, though, that these are all banks, which means that they are FDIC insured. They should be, right? And they all say it at the very bottom of the website, which means I've done a whole video on FDIC. I'll put it here, I guess, on FDIC insurance and how it works. Essentially means if the bank were to collapse for any reason, which has happened in my lifetime, and I am not 100 years old. I know black don't crack, but I am not 100 years old by any stretch of the imagination. But what that means is, if the bank collapses, you will get some of your money back. Now, the reason why I say some and not all is because FDIC insurance, last I checked, was like $250,000. So if you got more than $250,000, you could be at risk. Now, there are ways to increase your FDIC insurance. If you want to know how to do that, go and check out that FDIC insurance video. There are several really cool ways to increase your FDIC insurance. I think I wrote an article on Business Insider on how to increase it. It is really interesting strategy-wise how you can increase your FDIC insurance while staying at the same bank. You can also just have a bunch of different banks. In either case, that is one obvious advantage. The other one is, depending on the interest rate, that's a whole lot of easy money. I mean, we're talking about if you put in $10,000, $400 a year, by sitting back and doing stuff you already should be doing easily. And again, if I am saying, you know, the old school rule was 6 months of your expenses, if I'm saying 12 months of my expenses for the entire year, making 4% interest every single year, we're talking, I know flights have gone up, but we're talking, you know, a solid vacation every year, off of doing stuff I should already be doing. That's easy money. That's easy money. That is something that I could be doing compared to what these average banks are paying. It is a very, very easy win that you could be doing right now. And then the last part is, you don't really lose money here. Now, the only way you can, again, lose money is opportunity cost and perhaps inflation. Inflation averages around 2 to 3%. Obviously, again, that's an average. Okay, so inflation can change. I say opportunity cost because sure, I could make more money if I had invested it in the stock market. In some cases, 2026 so far, the answer is no. But the last part, and perhaps the favorite, is on paper, you're not going to lose money. Now, the key word I said it was on paper. The only way you're going to lose money is via inflation, which varies year to year, but the bank says you're gonna get 4%, you're gonna get 4%. If the rate goes down, cool, but you are still going to get paid. You're not gonna put in $10,000 and lose 7, 8, 9% like you would, or can rather, with the stock market. You are going to get the rate that the bank says you are going to get. Now, that rate can change, but you are going to get something. The stock market promises you nothing but change. So there is that. And that's not to say that you should only do a savings account, but that is to tell you what the possibilities are. Now, again, you can lose value to inflation. That is true. And there's something called opportunity cost. What if you had taken that money and invested it in something else? That is also true. But, you know, realistically, you are going to get a return versus seeing a real loss in your account. So that is an advantage as well. Again, this is the baseline, the foundation of your finances. And in 2026 especially, it is something I would strongly consider. Now, with that, where are the places that you can consider opening a high yield savings account in 2026? I am only going to give you the banks that I have had personal experience with, or my clients have had personal experience with. And for the ones I don't, I'm going to give you a resource that I like to use and trust for reviews and things of that nature. All right. The first one is American Express. Yeah, that American Express that does credit cards, they also have a savings account. It's good, it's easy, it's simple to use. I like it. That you don't have to have a credit card to have a savings account at American Express. Their rates are, generally speaking, when I look at the market of all the rates, pretty high. Okay, I've never had an issue with American Express. Ally, very good. Again, none of these banks pay me, and they should. If they did, I would also tell you if they did, because that's the right thing to do. But they don't pay me. I'm annoyed. Ally should be sending me a hoodie or something. They have not. They don't talk to your boy at all. Ally is another one that I've had experience with. I mentioned my story with them earlier. They don't pay me. They don't send me no hoodies. They don't send me no hats. They should, but they don't, and I don't know why. They don't like me like that. It is what it is. Anyway, compared to others, their rates are high, their customer service is good. I love any financial institution that has 24-hour customer service, and Ally is one of those. And then the last one is Marcus. Marcus was started out of Goldman Sachs. I probably had them maybe 5 to 7 years, if I remember correctly. Zero issues out of them. And again, they also pay a comparable rate as well. Now, Each one of these are up to you, but if you want some that are not online, or perhaps they have a physical branch or something that's closer to you, then you can go to NerdWallet. NerdWallet also does not pay me. If you want a more comprehensive list, then you can go to a site like NerdWallet. NerdWallet also does not pay me. However, they do a bunch of comprehensive lists. Now, if you do click on one of these links on NerdWallet, they might get paid. So there's that. You may also see some of the banks that I have used beyond NerdWallet. These banks are relatively popular, some of them anyway. The good thing is rates could change and they will update those on the site. So that is one of the advantages of using them. Now, you have the pros and cons. You know where to open one of these high yield savings accounts, but I almost forgot this part, the strategy piece of it. What am I going to use it for outside of just the emergency savings? We got that part. That's easy, that's fine. But what else? Primarily, you want to use a high yield savings account for things that are known for a specific dollar amount. So for example, yes, a down payment. If I know for a fact I want to get I want to get a home, a car, maybe a vacation fund. This is like something I know I want to do. It has a specific timeline and it is 3 years out and under. I'm absolutely using a high yield savings account. I don't care what the rate is. My primary thing is I'm saving for it. I know for a fact I don't want to lose it and I'm going to need access to it. When I'm talking about saving money or having a fund for my, my deck or my repairs or anything like that, that is where I'm going to use a high yield savings account for. Also, and I may need to state this, I'm not going to sell all of my stocks and go to a high yield savings account because this is giving me 4% and the market is down. It may feel logical to do that, but again, it might make sense to be a long-term investor here. If you are concerned about where the market is, and I know and understand it can be choppy, we can talk. I am a financial advisor. This is what I do. You can go to buildingbread.com/callkev and we can talk one-on-one. Where's your portfolio? What is going on? How do you feel about the market and where your stuff is? Because you could just be investing in something that's not working for you anymore, or there could be something else that's going on and we can help get you focused and figure out a plan that can help you. So buildingbread.com/callkev. That call is free. In either case though, the strategy piece is extremely important because having a high yield for your emergency savings is one account. Having a high yield savings, you can have more than one, right? Having a high yield savings for, hey, this is my vacation fund, my repair fund, my car fund, whatever it is a second one. These pieces of strategy are extremely important. All of them can create good passive income for you and continue to build your wealth. Those are the ways that you want to use them. And here's the other piece that people don't talk about. You want to have your beneficiaries updated on all of these. Yes, you can add what is called a POD, payable on death, meaning something happens to you, it'll go to the people that you want it to and not get tied up in the courts and all that kind of stuff. That is the thing that most people are not going to talk about because they might be influencers and not practitioners, meaning, the ones pushing the buttons and helping people on how they do these things. You can also have a joint account if you're like with a spouse or something, which means it will automatically transfer should something happen to one of the account owners. Just a little tip on the strategy piece for you. And now that you have everything, you are ready to go out forth into the world and get a high yield savings if that is something that you choose to do. And now you are ready to go out forth into the world and get a high yield savings. Now, with all that, people have asked me this before, really within the last 5 to 6 days. I don't really see a ton of downsides. I mean, usually we talk about hey, you could do this, but really, some of those things you should consider, really more so about the stock market per se. I don't really see a ton of downsides. Okay, I already said don't sell everything and move to a high yield savings. But outside of that, I mean, you can get one. It's not, I really cannot fathom a whole bunch of bad things happening by having a high yield savings. I've already said you do want to be aware if it's all online, you might have to be concerned about that 1 to 3 day moving period of transferring money. If that's a concern for you, that's one thing. You don't have to put all of your money there. Just be aware of that. So that's really it. But I'm a big fan of it, been using them for years. Your bank may be paying more, and you can go to NerdWallet to compare all of the different types that are out there. If you want to learn more about FDIC insurance and how you can even increase your FDIC insurance by staying at the exact same bank, you want to click this video right here.